Hi, my name is Colin Bernd, Associate Financial Advisor at Advent Partners, here to provide this week's market commentary. Growing up, my favorite roller coaster was called Steel Force, which was located in Disney Park. The roller coaster would climb 200 feet before dropping into a series of swoops up and down. While this made for an entertaining roller coaster, that same feeling is not nearly as enjoyable during times of market volatility. Stocks are trending lower this week after several roller coaster sessions that much resembled my experience on Steel Force, as investors grappled with escalating trade tensions between the US and Canada. President Trump's latest tariff threat, a 50% duty on Canadian steel and aluminum, had markets on edge before a last-minute policy reversal cooled tensions slightly. The original 25% tariff on these metals will still take effect, but the threat of an even higher tariff has been pulled off the table for now. Canada has threatened to retaliate, but that is on hold as well while trade talks continue. Markets have not been taking the uncertainty lightly. The S&P 500 industrial sector dropped 1.5% as investors weighed the impact of higher import costs. The NASDAQ, a particularly sensitive to economic worries, saw its worst day since 2022. On the inflation front, we received a bit of good news as consumer prices rose just 0.2% in February, slightly below expectations. Annual headline inflation now sits at 2.8% year over year, easing some concerns that tariffs could accelerate price hikes. And in Washington, lawmakers are racing to pass a bill to prevent a government shutdown before Friday's deadline. The House approved a short-term funding measure, but the Senate will need bipartisan support to get it across the finish line. With trade wars heating up and economic uncertainty looming, investors are bracing for more market volatility ahead. Stay tuned for future updates from our team as we keep you up to date on what is happening in the markets. Thank you.